Okay guys, this is Doug. I'm going to review a trade from May 3rd, 2019. This particular trade was for Maxer Technologies. They popped up on our pre-market scanner, and that is set up basically to look for volume, unusual volume. And so it popped up at about 7:52 a.m. I've got it paused at 8:34 a.m. just shortly after the bell. We're going to go over a few things um, that hopefully is beneficial in your trading moving forward. So at 7:52 a.m. Central, this is all Central time. The market is 1 hour, ahead of us. So it popped on my scanner 7:52 a.m. Central, which is 8:52 a.m. Eastern. And the scanner setups, there's so many different ways to use them. But basically, you can use FinViz to scan for stocks that have volume. And there's so many different parameters you can set up. So it's basically just whatever it is that you want to do. Well, once we find interesting movement pre-market, then we can narrow down our list based on whether or not those movers have a catalyst. A catalyst is basically, something that's pushing the price action. Whether it's a earnings report, a drug phase trial, or something, just some kind of news release, or even a geopolitical event, that can push certain stocks, certain directions. So basically, with our pre-market scanners, we identify them, and then we narrow down from there. For day trading, and that's what I'm going to show you here, is a day trading way of working that I use, and hopefully it's beneficial to you. So during the pre-market running, after we find them, then we do some quick DD. We can look for float. That's an important thing to know. What's the available amount of shares out there? Maxer has less than 60 million shares, so it's technically a lowish float. It's not a tiny float, but it's low enough to where it's a small cap company, just slightly above penny stock range. So now we know the share count, and a great resource is Fintel.io for looking at institutional ownership, insider buys. It's a great website. Get into it, learn it, use it if you're not already, and you'll probably agree with my assessment that Fintel.io is a great tool to add to your trading methods. So we have the catalyst, and then the next thing we want to know after we find the amount of shares out there while we're in Fintel, looking at who the institutions are. There's lots of institutionals out there, toots as I call them. BlackRock is one of the better ones. Vanguard is in my opinion, one of the better ones. Perceptive Advisors is one of the better ones. And these companies have a lot of resources available to them. And here we are, just mom and pop trader. We're not privy to everything, all the tools that they have. They've got a whole staff of people digging in and looking at the numbers and doing all of that. So they make informed decisions, and then they make their price targets, and they determine if something's a good buy and a good investment. And they're not looking, so much for day trades. These guys are investors. So if you're investors that you lean towards or in a company, that can be taken as, another sign, just another indicator, just like the other indicators that we use to make our decisions. Money flow, RSI, momentum, that's just some of the things that I have up on my chart, but the most important one really for me is volume. It's so important that I've got it here at all times. Even if I have level 2 up and the news up, and over here I've got time and sales. And even though it's paused and it's on demand, there's really nothing going on at the moment. But during live trading, this will be lit up. It'll give you the time and the sales and the size of the sales and buys, right? So the next step in our process is looking at previous history, right? And so just pull up the charts. I usually go 180 days out on recent history, and after we do that, you can look and see that these guys have been trending down hard, and they took a really hard drop here. And turns out that the reason why we're having our price action today is because they're receiving an insurance settlement for $183 million. Now, 183 million may not be much to some companies, but for a penny stock, that's quite a shot in the arm, right? That settlement was for a satellite failure, and that satellite was an income producing asset for this company, and they lost that asset, and it's been trending down. And if you notice, you have your volume before, and then you have your volume after, and that volume tells me that this company has had a lot of trades going on, mostly selling, obviously, because it's pushing down. So one of the other things that we determine with Fintel is, short interest, insider buys, insider sales. So there were some insider buys going on, but I noticed Jordan, one of the guys in my trade groups that I'm in, noticed there was inside sales, so that kind of canceled each other out, so that's off the table. What we're looking at next is, the short interest, come to find out, is like 13 some percent, which is a rather nice percentage of short interest. That means that if you have a catalyst, a positive catalyst, this thing can have a short squeeze. Feel free to Google that. Another great resource for us traders is investopedia.com, and there's so much information, a wealth of information there. You can learn a great deal just from doing a little bit of homework before you actually start trading. So while we're waiting for the time to buy, that's when we're doing our DD. We're making sure that we have the odds in our favor, because the number one rule with regard to trading stocks is protect your capital, protect your money. You are the only one that can do that. 90%, everybody knows this, 90% of new traders lose. And the reason why they lose is because they don't understand how to protect their capital. If they had their money protected, then they wouldn't have lost. They'd still be in the game, but they get discouraged because they, start out with a couple of $100 or whatever, and then they lose it. Well, the market is basically just a tool to transfer wealth. And if you're a new trader that is not protecting your capital, you're just simply transferring your money to the market, to the people that know what they're doing. A quote attributed to Warren Buffett is, the markets are basically transferring wealth from the impatient to the patient. So if we exercise patience and restraint in our orders and how we execute our trades, then maybe we can have a little bit of success. So back to this particular trade. Whenever you look at the previous price history, you have your supports and your resistance, and that's, great without a catalyst involved. Just the normal business day, you're going to have your certain support and resistance lines. But whenever you have a catalyst that throws into the mix, well, it's a whole new game. Well, now you're going to have a new support and a new resistance. So what I'm looking at here is this is my support line for this particular day, for this particular trade. 550s. We shot up, we pulled back to here. We came up a little bit, we had the choppy stuff, and we pulled back to here at the bell. You see the volume. The highest volume candle of the day is at the bell. Usually it's going to be right around there, especially on the catalyst play, right? So then following that, then we have what looks to be confirmation. But this is where a lot of new traders get tripped up. A lot of new traders say, okay, 3 bars, I'm in. Well, the thing you got to keep in mind is that you're not trading just against you and the computer screen. There's a few thousand other traders on the other side of that screen. And then there's another trader who is very intelligent and who watches what we do. That's algorithmic trading, and that's coupled with high frequency trading. These computer generated trades, believe me, know that you and I are looking for that second or third candlestick holding above the SMA. And if you and I get in on this particular trade right here, we're actually, I see it as a bait personally, because this is granted confirmation, but we don't have volume. That's the missing link here. That's why I held off. We don't have volume pushing the price action up. We just have a random go up. Now watch what happens. Bump that up 10 minutes. Okay. So we had our pullback at the bell. We had our confirmation without volume. And then boom, we have volume pushing down. You see that? So if we get in here without the volume, without that other missing piece, then we're followed up with that red candle. And it happens all the time. It happens all the time. And if I got in up here 573, then all of a sudden I've got this sell off at 565, as it's coming down, I'm getting nervous, right? A lot of us new people are going to get nervous and we're going to sell. But we can't be thinking like the new guys. We got to be thinking like the smart guys. So then you come over here. And what do we have? We have confirmation. Here's our price over here, 572. You can get in at that same place. You can get in with the odds in your favor. You see the difference? Huge difference. Now we're going to go ahead and put this back in motion. And we'll zoom out just a little bit. But you see what I'm looking at. Let's bump that up another 10 minutes. Pretty sweet, isn't it? We had the odds in our favor. Now let's pause this a second. Okay. So pay attention to that. And also, using on demand lets us go back and review our winning trades, our losing trades, try to find out what it is that we did, but review the catalyst. Don't just look at the candles and the support and resistance. Look at the catalyst. Why is it that you day traded it? Why did you pull the trigger when you did? And why did you pull the trigger at that particular point in time? Was it because of this? Right? And then you sold here, and then you're like, done. I'm done with this company. I'm mad. I'm irritated. I've already lost. I blew my capital, especially if I have a cash account. I blew my capital, so I'm done. I'm done for the day. Well, if you'd have had a little more patience and waited for the volume to push you up. I've called this strategy the Carper Method, C-A-R-P-R. Basically, it's talking about, a catalyst The volume being really strong, it's like an aircraft carrier on the ocean. They're really difficult to turn around, right? I mean, that could turn around, but it's more likely, given the whole scenario, going in my favor whenever I have that catalyst and I have that aircraft carrier of volume pushing it up, right? And then the next thing we want to do is, once we're in the trade, go ahead and execute our exit. And for day trading, the most reliable trade during market hours is trail stops. Trail stops will, and you use Investopedia to research it if you don't understand it, but I'll give you kind of a quick view here. The trail stop is, I bought in, we'll say 575, right? And if I have a 15-cent trail stop, then if it immediately turned against me, it would sell at 560, right? So that's well within our percentages of capital, risk and reward, that percentage. So if it continues to ride up, then all of a sudden I have a guaranteed green play. And during these next few minutes, you can adjust your trail stop. You can start out with a 2-cent trail stop, and then as it's coming up, you can adjust it and give it a little bit more room. Just cancel and replace the order with your Thinkorswim. And the beauty about TD Ameritrade's Thinkorswim is that you can use your app on your phone, your smart device, in addition to your desktop or your laptop program. So, put the odds in your favor, and then give yourself a little bit of breathing room as it's gone up. You have a green trade, and what always happens on these guys, right? They only go up so far before they start to get choppy, and then a lot of times they'll just boom right back up again. So as you're green, just adjust your trail stop. Give it a little more space. Now let's move on forward. We're still green. This is still a great trade. We peaked at 617. We're currently trading at 610. If you give your trail stop a little bit of room, it'll get through. So let's bump that on up. We had that little choppiness. Peaked out at 616. We dropped down to 603, But a 15-cent trade, if you made that adjustment here at $6, you're guaranteed a green trade. Guaranteed. And that gets you through here. It gets you through this little bit. Let's take a closer look. See that? That's not a hard candle pullback. That's not a time to sell. That's not validation of reversal. But that'll get you out if you're not adjusting on the way up. Okay? 1625. So let's bump this on up. We're now, just past 45 minutes after the bell. And what do we got? Let's blow this up again. Let's blow up the trade. Okay. So here's the bell. Here's our pullback. We could have got in here. We could have got in there, but the odds were against us. How many times have you seen one do this and then pull back? And this is where it ends, and then it gets all choppy after that. But if you waited until here, until you had the volume pushing it up, then the odds are in your favor. And then you just adjust a little bit on the way up. It's kind of like playing the slots at the casino. Whenever you're on a 25-cent machine, right? The cheap machine, and you hit $100 jackpot. Well, you can continue playing it, right? But pick a number, a sell number. If it comes down below $80, I'm cashing it out. I'm cashing out that ticket and moving on to the next machine. Well, it's the same thought process, And if you gave it, say, 15 cents, you rolled up to 658, and then you're back down, and you're out. You're out at true validation of reversal. You're in at true confirmation of the uptrend, and you're out at true validation of reversal. Beautiful. That's what we want to see. That is a textbook trade. So just a quick recap. Set your scanners to look for pre-market volume. Out of that list, narrow it down, which your scanner should be narrowed down anyway by price, whatever it is that your budget is for the day, right? Say you're looking, if you only have $200 in your account, well, you might be limited to feeling good about a $10 trade or a $5 trade or a $1 trade, right? But it's the percentages that matter. If you make 5% on $200, right? It's the same as if it's a $200 amount in your brokerage account. If you make 5%, it's the same whether the stock price is $2 or whether the stock price is $20. It's the percentages, and then it's the win percentages. So if you can use Thinkorswim, you can use On Demand to review your trades. You can use their paper trading side, have them set it up to where it's real-time data, and you can do paper trading in market hours, and you can be logged in on live action on the desktop and paper trade on your phone and take advantage of it, or you can be logged in paper trade on your phone too. It doesn't matter. It's just the point is to practice, to get the experience under your belt so that you know what you're doing before you're risking your money. And whenever you do risk, stay within the market hours initially. That is a huge thing in your favor, right? And as you feel comfortable with that and you're growing your account, then you can start expanding, what it is that you do. My primary focus is biopharmaceutical stocks. And out of those, generally speaking, they're penny stocks, right? However, this particular company, this isn't bio. This is outside of my normal trading, parameters. It's not what I'm looking for as far as on a day-to-day basis. I'm looking at my drug stocks first. But if you pop up on my scanner, I'm going to check you out. And if the stars are aligned, we're going to probably make a trade, right? And I'm going to try to get in down here and ride it up. But back to pharmaceuticals for a minute. Finding stocks to trade. You can use biopharmcatalyst.com, earnings whispers. Look for a catalyst. Look for a reason for the stock to move. And then set your, here we go, 5-3. Set your watch list for the different dates, right? Let me show you something here. I have, look at all these watch lists, right? You have all these watch lists that you can set up, name, and save. And then drug stocks, PDUFA dates. Look at that. I got the whole year covered practically, from February to November. Here's one of my scanners, right? So, and then built in Thinkorswim, you have the public ones, right? You can look up percentage gains, ETFs, NASDAQ 100, gap ups, gap downs. These are built in. All these guys are built in. I didn't set those up. And then you've got upcoming splits or upcoming earnings, upcoming dividends. Set your watch list to whatever the date is, or just use these guys. Lovers and losers. I love this one. Analyst downgrades, analyst upgrades, monkey upgrades. Oh, I'll tell you what, I found one with that. Pre-market movers, post-market movers, top 10. Volatility increase, right? NASDAQ, New York Stock Exchange. You can break it down by industry. Real estate, healthcare. Oh, bio. Obviously, I've been in that one. So there's so many options that are built into Thinkorswim. This is a professional grade platform. So why wouldn't you want to use the very best there is? Webull is a great broker. I have it. I use it. But they're not having options. They're not having trail stops, yet. Once they add those, then maybe I'll consider it. But if you can, say, put back, a little bit of money, then you can overcome the commissions. And if you trade regular, you can get with on-demand customer support and say, hey, look, guys, I just want to try this out to see if I like it. And they'll see if they can't give you 10 free trades. Well, that's 5 stocks, right? In and out is 2 trades. In and out, that's 2 trades. So there's 5 different stocks that you in and out. And that would be commission free. All you gotta do is ask. Just get a hold of these guys. They're great. Their customer service is second to none. Unlike some of the other free brokers, you get what you pay for. So if you want to drive around in a platform that has free commissions, that's nothing wrong with that. Robinhood, well, you know what? Robinhood is not the greatest, but it has its uses, especially if you stick with limit orders and options trading possibly. I think you can do crypto with Robinhood. Webull has full market trading hours, which means I can get in 3 a.m. Central, right, all the way up until the very end of the trading day. So that works great for bio if I'm swing trading something. So you have your options. Just be careful with penny stock bio. Holding penny stocks overnight is risky business. Serious. Good way to blow up your account. Remember, 90% lose. 90% lose because they don't protect their capital. And if you're in on Robinhood on an overnight penny stock, you're stuck. You cannot get out of your trade. You can't sell at 7:30. If it tanks, you're stuck. You can't do anything until you have the ability to trade on the market. Well, Thinkorswim lets me start at 6 a.m. Central. Well, that's pretty good. So that's why I will go ahead and use it. And I've asked them, come on, guys, let's bump this up a little bit on our hours. And they may consider it. It's just not in their plans at the moment. But Webull, you can go in from the very beginning to the very end, and that will help you with bio. But anyway, as far as this trade, hopefully you picked up everything you needed to pick up. Just another random trader here, who may or may not have trading experience on the stock market. Take this with a grain of salt. This video is for entertainment and educational purposes only. I'm not telling you to trade Maxer. Absolutely, I'm not telling you to trade anything. All I'm trying to do is point out that there's certain things that I look for, and there may be certain things that you might want to add from what you normally do. All right, well, y'all have a great day. Trade safe, and remember rule number 1: protect your capital. All right, we'll see you guys later.